Hello everyone, myself Shiv Prasad. I'm Corporate Financial Reporting Faculty, Masterminds, Guntur. Finally, our CMA final examination, CFR paper comes to an end. Let us review the question paper. So let us see for today's examination. So out of MCQs, the first one is coming from CMA Inter. CMA Inter, we are having Ind AS 2. From Ind AS 2, they are asking valuation of work in progress. So valuation of work in progress, just like valuation of finished goods, they have asked valuation of work in progress. They have given purchase price, selling price, cost to sell and conversion. We have to make the arrangement and we have to calculate what is cost for work in progress and net realizable value for work in progress, and we have to check whichever is less. And coming to the second MCQ, this is also from CMA Inter. In CMA Intermediate, we are having Ind AS 33 in corporate accounting. Earnings per share, they're asking diluted earnings. So they're asking about diluted earnings. We have to calculate what is diluted earnings per share into number of shares we had. Weighted average number of shares we have to multiply to get the answer. And third one, from here onwards, so all CMA final core questions they have asked and very easy questions they have asked. So the third question, they're asking here a revised carrying amount as per Ind AS 36. So as we know, impairment. So impairment, when it is considered for CGU, when you are conducting an impairment test for CGU, so when whatever impairment loss we are getting, if CGU consists of goodwill, first you set off the goodwill. When you set off the goodwill, remaining balance will be set off against the remaining assets in that particular CGU. So obviously the goodwill will become zero, and with if it has impairment loss, we need to calculate carrying amount and recoverable amount. Carrying amount given, recoverable amount given. You can find impairment loss, first to set off goodwill, then to plant and machinery. So this is a direct question from Ind AS 8, changes in accounting estimates. We are doing accounting prospectively. So when it comes to fifth question, they are asking about valuation of shares. They are asking what is the goodwill valuation based on capitalization of average profits, capitalization of super profits. So capitalization of average profits we are doing, first we are finding capitalized value minus net assets. This is the first one. Second one, we are having super profits by normal rate of return in order to calculate goodwill under capitalization of super profits. So you can easily find out, every details are given over here. And coming to sixth MCQ, they are asking about partly paid up equity share. Okay, so directly they have not asked the value per share, but they have given here net assets and notional call value also given indirectly, and you can find out what is value per share for fully paid up share and minus 2 if you do. Obviously you will get it for partly paid up share. They didn't ask fully paid up, partly paid up share. So both answers are there here. Fully paid up and partly paid up, you need to find partly paid up shares. So coming to the seventh question, it's a direct question, goodwill or gain on bargain purchase. So we are having that formula already, purchase consideration plus NCI minus net assets. So we'll get positive means goodwill, negative means gain on bargain purchase. And next question, they're asking PC calculation under Ind AS 103. So PC calculation, what is the fair value? We have to find out. Fair value of shares issued, fair value of assets given up, contingent consideration, fair value, present value of deferred consideration, everything you can calculate and find out the amount of purchase consideration for 80% stakes. So next one also we are having business combination under common control, we are following pooling of interest method. And we are having the 10th one is relating to equity method. Under equity method, here investor company having share in net assets of investee company. So you need to find out what is the value of investments. So for the value of investments, you need to add share of profit and share of OCI, you will get the value. And next question they have asked over here from joint operations in joint venture. So here we are having joint operations. When you're having joint operations, Ind AS 111 will be applicable. How much amount of loss will be recognized by Anant Limited? So here under Ind AS 111, we have to recognize the loss to the extent of other party. We are not recognizing full value of loss, to the extent of other party we have to recognize. So next one is also a direct theory question. They're asking here, parent company loses control of subsidiary. What is the accounting treatment? So what we are doing here, initially when we recognized control, when you're having the control, you recognized entry net assets account debtor to NCI account. and if you are getting goodwill, debited goodwill. So here, when you are losing the control, you have to reverse the entries. NCI will be derecognized, net assets will be derecognized, and goodwill also we have to derecognize. So check out here which one is the best one you have to select. So next one. So this question they have given here. So based on human resources accounting. So like HR operations, what will come over here? They're asking that which report consists of all these things. Easy question, direct question. Human resources. IGAS2 stands for what? We're having grants in aid. And external benefits of sustainability reporting. Sustainability consists of what are the external benefits they are asking here. External benefits we are having here, reputation and brand loyalty, and enhance the perception of organization value in the public. That's all about 15 MCQs, and they were very easy, and the first two things only they are asking from CMA intermediate. Well, coming to descriptive part. The first question, for the first time they are asking direct question from Ind AS 12. So Ind AS 12, and this question directly given from CA inter values. We can say CA inter study material. From CA inter study material, we have the same question, and same question they have asked, just they changed to Ind AS 12. Accounting treatment will be same. So here written down value is same in both accounting records and tax records. Rate of depreciation is also same in both accounting records and tax records, but method of accounting is different. In tax records, we are doing depreciation on block wise, and coming to accounting records, we are doing on individual wise. So likewise, you need to find out the difference between both carrying amount and tax base, and find out deferred tax asset or deferred tax liability. And the question number 2B is also a direct question from Ind AS 21. From Ind AS 21 also very rarely they are asking in the examination, but this time they have asked. So when they ask for the first time 12 and 21, direct questions they have asked. So by reading two times, you can understand that what will happen and what is the initial recognition when you're having a foreign currency transaction. And subsequent recognition, you need to check out monetary assets, what is the value, and non-monetary assets, what is the value. And third question also from Ind AS, we are having Ind AS 108, operation segments. In operating segments is a direct question given. You have to conduct a revenue test, segment test, results test, and assets test, and you need to find out which one are reportable segments. And clearly in the question given, no additional segment will be identified. So what is the results as per this question? You need to find out which one is the reportable segments. So coming to over here 3B, so they have given here valuation of shares under equity method based on net asset basis. So you need to find out net asset basis calculation value per share. So first you need to find out total net assets. Before that you need to find out goodwill. Then you need to find out net assets of the company available for equity shareholders divided by number of equity shares. You'll get value per share. And net assets value per share, if you find, that will be the thing. So in the question, net asset base is given, intrinsic value is given, intrinsic value base is given, or asset backing method is given, the answer will be same and the procedure will be same. And fourth one, they're asking from financial instruments. It's a little tricky question. So financial instruments, Ind AS 109. So they have given the borrowing loan, the loan value they have given, and they're having given here upfront processing fees, which is a transaction cost. You can deduct, first you find out what are the cash outflows, and then you can do amortization cost table. And finally from we are having internal reconstruction. Basic things they have given, no great adjustments we had. So basic things. So every examination in internal reconstruction, these adjustments were there. Coming to the fifth one, business combination. In business combination, share issue expenses is new point, and remaining all are easy points they have given, like fair value changes of current assets and non-current assets given. Contingent consideration is given for calculation of total purchase consideration. Remaining no other adjustments we had, only intercompany transaction. Share issue expenses will be charged to P&L account. And they need to ask one by one, PC how much, net assets how much, goodwill how much, journal entry how much. That's it. They didn't ask balance sheet also. Coming to consolidation, all adjustments are very clear. And the same thing, goodwill impaired. Fair value basis when you are doing, impairment of goodwill will be shared by parent as well as NCI. And the last question is relating to, so economic value added, all the details are given. So no PAT minus, we are having cost of capital. So next we are having theory questions from integrated reporting framework. They're asking categories of capital: manufacturing, finance capital, natural capital. These all things we have to discuss. And here, public accounts committee structure, government accounting standard advisory board, GASAB structure you have to explain. And last question from business combination, sale of stakes. This is what we expected already. Last question they're asking from either sale of stake or purchase of stake. They have given here sale of stake. So that's the end of the session. I hope you did well in the examination. Thank you.